awesome AlphaPicks guys. We'll just wait for them to come on. Actually, do you know what? I can be proactive and I can do the legals whilst we're waiting. So nothing discussed in this space of session constitutes trading or investment advice or infers any kind of endorsement by PiQ Global Limited, trading as PiQ or PiQ Suite, or indeed the hosts, which, as you know by now, is the awesome lads from AlphaPicks. Which they will, more them than me, will give you an awesome rundown of what's happened at the week. Potentially what to keep an eye on the horizon. Morning, Cam. Afternoon, even. Let's just wait for them to turn up. I hope they turn up. Let me just make. Here's one of them. Bum, bum, bum. Invite to co-host. There we go. And there's the other one. Invite to co-host. There we go. Let me just quickly put the message out saying it's live. Dun, dun, dun. Morning. How are we?
Afternoon.
Afternoon, even. Yeah, good point.
You're very good.
A rare afternoon session.
It is. Considering it will. To be honest, I was in a bad way this morning. I mean,
you sound a little bit rusty. Not gonna lie.
Well, you saw me after what 8 or 9 pints, and then I had a few. Then I think I had a few more. Yeah. Anyway, it was a PiQ Christmas booze up. So yeah, less said about that, the better. But anyway, how are you, Jay? How are you, Jay? All the way over in Mexico, strung up by the.
I am doing well. Still surviving. Not being found with the cartel yet.
Low bar. So what's happening?
Still staying plugged into the markets as well, AJ.
Yeah, exactly.
Oh, always.
Can't stop.
Always. I mean, ironically, the final major trading week of the year, and it delivered. And it hasn't even finished yet. We obviously will see how price action today goes, but futures look a little bit wobbly as well. And obviously that all stemmed from the Fed on Wednesday. But before we get to the Fed on Wednesday, let's do Monday, Tuesday.
Yeah.
And the one thing, 2 stories actually I wanted to mention before we get to the Fed on Wednesday. The first one was trading on Monday. Tesla, Amazon, Apple, a few of the others hit new all-time highs. The one that missed out on the party was Nvidia. And on Monday, they closed down, I believe it was a couple of percent, which put the stock officially in correction territory, which is down over 10% in a month. And that was an interesting one. And the reason I say that is Nvidia, we always thought at some point, not that the wheels would come off, but investors would slowly get, the benchmark was going to set higher and higher and higher, and eventually get to the point where people would say, actually, do you know what? I don't think the upside's there in Nvidia anymore. Let's rotate out of it. Let's take profits and let's look to allocate in either the picks and shovels or just to more value opportunities.
Well, exactly that, right? We've been saying for ages, it's due a correction. And a correction is a healthy thing to happen in a market. So people saying that, oh, this is it, this is the end of Nvidia after it's come off a few percent or 10% after the run it's had, I think it's a bit bizarre. It's like, just take a step back a little bit. You know what I mean?
Still up 160%.
Exactly.
Even after the correction, so it's still a healthy.
Yeah, it's not a bad stock,
healthy gainer, isn't it? Not a bad stock. So I think it'll be interesting to see how it goes, particularly into Q1 of next year, as to particularly when the next quarterly earnings come out, and see whether that bar has been set even higher again, and if it can keep up to it. But yeah, that was an interesting one from Monday. Tuesday, this is probably the one of the highlights for me. Cacao futures hit a record high. They have nearly tripled since the start of the year. And so it's not just coffee, which has obviously moved similarly, but obviously chocolate effectively catching up on that route as well. All down to the weather in West Africa, which is causing a commodity spike there. And first fun fact of the day, what percentage of the world production of essentially cacao beans is made in West Africa, or farmed in West Africa, I should say?
Right, Jesse, do you know the answer to this before I go?
I do know the answer, so this is just going to have to be you, Ryan. Sorry.
You see it.
I'm going to say 42%.
70.
So yeah,
70% of the world production. It's a lot, isn't it?
Yeah, so
just for West Africa.
I guess that's why this so susceptible to these fluctuations if we get bad conditions in that one area. Really, I guess. Again,
Yeah.
like you said, it's not it's not just cacao. It's it's the coffee. Also, egg price. I saw a headline just now about egg prices on the rise again. Yeah, there's a lot of food stuffs out there that are up at highs or very close to highs, and I think this feeds through to what we've said in the past about inflation being the story for Q1, Q2 potentially.
Yeah. Agreed. And then while
Right,
we're
hang on.
main story of the week.
Sorry, Jesse, are you in a bird cage?
I mean, there is nature around me. Is there a lot of birds coming down the bike?
Mexico, live from the jungles of Mexico.
Yeah. Okay,
It's true. I can hear some little birds playing around.
Okay,
Yeah.
I've got my
No,
AirPods
mate,
in. I didn't think they could pick up.
I'm not one to judge. I'm normally it's beers and glasses chinking.
All right.
Yeah.
I didn't know if it was you down in the countryside.
Well,
The other one in the garden.
Yeah, there's normally a drill going on in the background for Ryan.
Yeah, exactly. I can't talk. But anyway, sorry.
Let's get up to the reason why we're all here. The Fed on Wednesday. The most interesting stat I saw, which I thought kicks off quite nicely, is the S&P 500 lost just over 3% in value in the 24-hour trading period after the Fed, which was the largest move on a Fed decision day since September 2001, which is 24 years ago.
Yeah.
So I think that was kind of show for me the impact that Powell had on his sort of guidance from here. But hey, let's throw it open to the room. Thoughts, opinions, concerns on the Fed and market reaction. What are we thinking?
Well, personally, I think it's one of those. It's slightly a result of reduced liquidity in the market because obviously there's a lot of players that aren't really involved at the moment. But obviously, we're just coming into the holiday period, so I think it's always we always know that it's possible to get these extended moves in these kind of conditions. But yeah, I think to be honest, I was a little bit surprised. Obviously very wrongly presumed that if the presser and that was going to lean one way or the other, I thought it was actually going to probably have a higher chance of lean dovish. So I was really surprised by this, but no, it's new.
Yeah, I had the same view as you, Ryan. I think coming into this, the markets were, I thought, kind of overly hawkish, and it would be a low probability that the Fed out-hawks them, and somehow they managed that, which was definitely shocking. I thought it would come in more dovish than market expectations.
Yeah, I mean, I agree. The only thing I think throw in the mix as well, given the size of the move and one that arguably has continued and will continue into close this afternoon, is that we have had a strong run up, particularly in the equity markets. And so, really, was there almost like any form of catalyst? Would be exacerbated by lower liquidity, investors looking to take profits, and people almost like triggering themselves into a correction just because of the run up that we've had over the past couple of months. So I'd almost argue that they weren't overly hawkish, but essentially the market was looking for almost any excuse to have a little bit of a correction.
I think,
and there we are.
The money there. I think you've absolutely nailed it because it's especially as well. Like if you think about it, if you're sitting on most of these most funds and that long S&P, you got to be long equities basically. It's like, well, what they got? They've got two options. They do nothing. Sorry, three options. They do nothing. They add more risk into the holiday period, or they take some risk off. Now, what are you going to do? It's always going to be option three, right? You're always going to be looking to take some risk off into the holiday period. Obviously, we've got the shutdown looming as well. I think you're exactly right. It's almost like any excuse to kind of de-risk books, and then it becomes self-fulfilling.
Yeah, agreed. And I think now, I mean, 2025, when with the other things you have to look at is that now the price in the market's almost gone the other way. You could say arguably too far in terms of the amount of cuts, which is basically, I think when I last checked, it was about 65 basis points of cuts for 2025, which is 2.5 as it were. I think even there you're going to see a massive amount of movement in Q1 on rate pricing, and so I wouldn't really like to call it one way or the other. I think you could enter into next year, and based on a variety of things, Trump, inflation, everything else, that could go down to 2, or I wouldn't be surprised that could still go back to 4 cuts next year. Like I think there's a huge barometer swing potential for the States next year.
it's very finely balanced, and we only need a few kind of things to go one way or the other, and we could have a complete shift in, pricing out for the year. Because right now, to be honest, I've not checked the pricing for 2025 cuts for a little while, probably too long. But when you said 60, was it 65 basis points? You said,
Yeah,
that shocks me a little bit. I don't know what I was expecting, but it feels like you say, it feels like it would be way more, or even possibly, what about if we start seeing hikes in 2025? When does that start getting priced in?
Yeah, 1.5, bang on 1.5 cuts since you're priced as we sort of stand through till December next year. So yeah, I mean that's where we're right there. I mean, actually, when we're talking about future pricing, obviously much closer to Blighty, Bank of England, I think their pricing has shifted as well, and I think that's a really interesting one as well. That they're using this gradual, that's the word that keeps getting bandied around from Bailey and Co. We're looking at a gradual approach to future interest rate cuts, but he flagged up a lot of uncertainty in the economy. And I think the problem for us here in the UK, from my perspective, is that they're looking at a slight tick higher in inflation next year by their own admission. Wage inflation creeping in, but also they've still stuck to their forecast of a slowdown in economic growth, particularly in the back end of next year. So all of a sudden, we could be in a situation where we've got stagflation over here in the UK. And then what do you do if you're a central banker? Do you want to raise rates when your economic growth is already stagnant and that puts more pressure on it? Or do you want to cut it in order to try and get growth back? But then obviously then you risk inflation kicking higher again and everyone, losing their seat. So I think it's not a story for right now, but I wouldn't be surprised if next summer we're sat here talking about the UK having a stagflation problem and the Bank of England being a pickle.
Unfortunately, I would make that the most likely scenario. Unfortunately, and also let's not forget, it's not just the BOE that's in play here. It's the Treasury. It's Rachel Reeves. It's like we're not entirely sure what they're planning in terms of. It could very easily be more rate hikes coming. Tax hikes coming. We just don't know what's going on there. They've been very careful in their wording when they're saying like, "Oh, Rachel Reeves won't be looking to hike or hike rates in future in 2025." They're not saying the party won't. It seems to be every time I see communications out from them, from the Labour Party, they're always naming Rachel Reeves. And as I was talking to Thomas on the Political Blast yesterday, that's quite a key thing, because they're giving themselves some optionality that should she get the bin, it means they can still hike without kind of saying, without lying so much, if you know what I mean.
Yeah, and I mean, you and Rachel Reeves aren't the best of chums.
We're not
anyway,
best,
are you?
honest,
No.
Not going to Christmas card this year, I'll give you.
I was just going to say, I don't, neither of you are on each other's lips. The feelings reciprocal. And while we're on central bankers, do we mind if I Bank of Japan? Throw a few bits and bobs around Bank of Japan, which I know sometimes isn't the most sexy thing to talk about. But I actually, ironically, and Jay probably could do this, is a piece I actually put out today on the Bank of Japan from their meeting yesterday. And essentially, if we think the Bank of England are a bit in a pickle, or the Fed, I would argue the Bank of Japan are in the biggest pickle of any major central bank at the moment. So for obviously for some of our listeners who maybe aren't too au fait with what's going on in Japan has basically got a situation whereby the Bank of Japan and Ueda, they have been holding off for 3 months now from hiking rates, because essentially they don't want to jump the gun on if inflation and wage pressures are going to continue to rise. They're not quite sure what's going on. If they do raise interest rates, then they're back in a problem whereby they don't want to overly kill inflation because of the historical problems Japan's had with deflation. But at the same time, they're not talking about looking at cutting rates, because essentially that in turn would then cause the yen to weaken and would put them in another pile of troubles. So the Bank of Japan is really in, damned if they do, damned if they don't. And the more they effectively keep disappointing the markets, i.e. it was a 50-50, 2-3 weeks ago, it was 50-50 if they were going to hike in December. They didn't. the differences that got priced out caused the yen to weaken. January now is a 50-50 of if they're going to hike or not. I don't think they will. And I think as that gets priced out in coming weeks, yen's heading higher again. And so, yeah, I really feel that if they hike, if they sit on their hands, or if they cut, all three scenarios are negative for Japan. And so, yeah, I think they're in a real pickle over there.
Exactly. I could not agree more with you, my friend. Well, like I said last week, it's like I think they've completely missed the boat to hike. As my favorite central bank cliche: hike when you can, cut when you must. They had the ample opportunity to hike, they never did. And truthfully, the way it's going, if I fancied a punt, I'd be punting that they cut before, they cut next rather than the hike, not next meeting. You know what I mean? Like I'd say the next movement. Every chance is a cut because I think they've both.
Yeah, that should probably be on your Christmas jumper, Ryan. I think that's one of your phrases of the year now.
Well, I might put it on my business card.
Yeah. Jay, you want to chime in on anything central bank related from this week?
The only thing that I had noted down, re the Fed meeting, which we haven't touched on, it was quite a popular thing on the timeline. But in November, Powell, let me just find, where's the notes here? In November, Powell was very specific that they wouldn't anticipate or predict, speculate on different Trump policies. But they did shift away from that because in Wednesday's meeting, Powell said that policymakers had begun to incorporate into their forecast the potential impact of higher tariffs that President-elect Trump may implement. So I thought it was a interesting political change from them. They're very openly not trying to be political last meeting, and then they seemed very openly political this meeting, which was, I thought an interesting change of stance from them.
I think these little nuances are definitely stuff to keep an eye on because it is kind of almost like looking behind the curtain a little bit, isn't it? You kind of getting a glimpse of, and they're not, the statements are very carefully crafted. Right, it's not like they're just throwaway comments. So that if it's in there for a reason to give a bit of messaging. So I think that's really good to pick up on those things. Something, the big elephant in the room, to shut down or not shut down. Obviously, it seems to be, every time the US government nears the shutdown, it feels like Twitter or social media is always like, the usual lot are going on. It's like, oh my God, this is definitely going to be a shutdown this time. It's going to be the end of the world. But bizarre, and it's obviously been in the past, it's been very obvious that they're going to find a solution at the last minute. It does kind of feel like this time, hardly anyone's mentioned the shutdown, and we seem to be closer than we've ever been. Do you know what I mean? To shut down, it's like, we're not, these things, you've always got to kind of guess, and you've always kind of got to assume that we do get a solution in the last minute. But with Trump coming in, that's obviously a bit of a throws the spanner in the works a bit. With the Christmas and New Year period coming up, I would genuinely say for the first time, for the first time in a long time, when we have these conversations about potential shutdowns, I would say the chance of a shutdown over Christmas and New Year is pretty solid. But the reason why that's not a massive deal is because over Christmas and New Year, basically government shut down anyway. So it'll be an interesting one. But I do think for once, it's just, this story for once is going under the radar slightly, and it might be because, there's so much else going on, but it's definitely something to be keeping an eye on. And again, maybe that is also weighing on risk.
Yeah, I definitely think it's weighing on risk. I mean, so the last, I did see a piece on this morning that essentially the last proper government shutdown was actually this time back in 2018, and the government was shut down for about a month, which was basically when Trump and Congress were having a Barney over funding of the US-Mexico border wall. And there's some of those brilliant clips of.
It was this time of the year, right?
Yeah, it was. Yeah. And pretty much, just before Christmas 2018, and it lasted until the end of Jan 2019. And for shame, I actually thought when I saw that, I was like, oh, let me take a look at what the US equity indexes did over that period, because I can't remember off the top of my head. I don't remember it being an absolute disaster though for the market.
Exactly that.
So yeah, and that was been shut down for a month, and obviously had cost billions. So even if it does happen, and we have a precedent of it happening, almost a carbon copy situation for a month only a relatively few years ago. And look, the US survived that,
Yeah.
and there wasn't a
And
disaster that caused.
clear. We're
So
only, if you are going to shut a government down over Christmas and New Year is probably the best time to do it, because everyone's
it is.
jollies anyway. But one thing I think
Yeah.
we need to be really clear on is government shutdown is no way indicative to US defaulting on debt or anything like that. And there's so many people that I see on social media conflate the two, and that's just very, very irresponsible. The government shutting down is not the government defaulting on debt. Please, please, please do not believe that for a second. That's just not. It's not the same thing. It's completely different. But of course, we know what social media is like, right? It's anything for a few clicks.
Yep, fear mongering.
Yeah, exactly that.
Yeah. Well, Jay, I don't think they're going to be scaring you too much, are they? In Mexico, I think you're on a Friday afternoon. I don't think you're going to be too bothered.
No, gonna get my pina colada soon.
Oh, living the life.
The only other thing was because it's a Friday afternoon, we have been able to have the Friday data out before our Friday fix. PCE came in cooler than expectations, which I did think was funny because the Wednesday meeting was so focused around inflation, and then the first print after the meeting comes in cool. Just had to be the way.
Yeah, I agree. And the thing is, because if it had come out at 2.5, so it came out at 2.4 versus expectation 2.5. If it had come out at 2.5, it would have been the highest print since I think it was May of this year. So it would have been something pretty noticeable. But the other thing I have to know is that it was only 2 months ago when it hit multi-year lows at I think it was 2.1 or either 2%. So it's like we went from 2.1%. Last month was 2.3. Now we're at 2.4. So, yes, you can argue that inflation is ticking higher, but, it's too early to call it a trend.
Yeah.
And, 2.4% is still, very tolerable within a US economy. So,
Exactly that. It's, it's, I think it's one of those, we're in that kind of Goldilocks zone where whatever side you are, you can make an argument that you're correct. Do you see what I mean? The hawks can make a valid argument that inflation's ticking up, all that stuff. But then the other side, you can say, well, look, we're still quite near the lows where we have been, and it's a bit of normalization. So it's an interesting, and obviously that takes two to make a market, I guess.
It does. And the last thing I wanted to throw in there as well, which is literally today. I don't actually know which cut, if it's the 10 o'clock New York cut, but triple witching.
Oh yeah.
And this boggled me. So the amount of options that is involved in this triple witching today is they estimate it to be 6.5 trillion, which is absolutely bananas. I think apparently it's slightly smaller than it was this time last year, but equally like it's basically close to an all-time record of notional. And I mean 6.5 trillion, that's a big number. It's a big number, no?
That's you wouldn't mind being a pound behind it, would you?
I mean, it's like your tab at the Stafford.
Well, not far off, mate. Not far off. Oh God! Oh, don't remind me. You're right. I guess it's and also it's quarter end, it's year end, it's this, it's that, it's the other. Is it triple? I think it might even be a quad witching day today, actually. But yeah, it's
I guess you would have the quarterly options as well. So
yeah,
I think so.
Again, it's an interesting one, and also the thing is, I think I was reading a piece. I believe it might have been Goldman Sachs a couple of weeks ago, and it was just like just a throwaway line in a report on something completely different. But they insinuated, and rightly so, perhaps, that I think these numbers, these option expiry numbers that we're seeing, the amount of notional going through is only going to get bigger because more and more options plays are being put to the market. Maybe I'm not saying it has to have a big impact every time because sometimes it just fizzles out, but it's definitely something we need to be aware of when these days occur because if we're at key levels, we see pin risk and all this kind of stuff come into play, and it will have massive movements on the market potentially. I'm not going to tell you which one, I haven't got a clue.
Was that?
I'm not going to say which way it has a massive move, but
Yeah. I know. I mean, I'd be interested to see. I mean, there will be the data out there in terms of like the split of where the strikes are and if they're calls and puts, which should actually be a very interesting
yeah.
piece to break down. But yeah, for the moment, all we know it's a big number on a on the Friday the 20th, 5 days before Christmas. That's what we know. So yeah,
Let's
that
be
itself
honest,
is
at least for Europe, basically no European trader is going to be at their desks at this time anyway. So, you know,
yeah.
everyone's down in the pub or at home already, tucking into their Terry's chocolate orange. But no, it's
Yeah. I remember as a last little anecdote that the because obviously on Boxing Day over in the States, obviously options can still settle on the 26th.
yeah.
And so we had one probably 5, 6, 7 years ago. And essentially we had a large client option that was settling on the 26th of December at the 4 p.m. London fix.
Oof.
And because it needed to be exercised at just after 4, the one of the middle office guys actually took his laptop to the pub, and was not fully intoxicated, but has had a couple when he was had to log into the system to exercise the option. So I mean, look, strange things can happen
Oh yeah.
on Boxing Day, but
Oh,
yeah.
Ryan, I find it hilarious that Phil's talking about himself in third person there.
Yeah, no, do you know what? No, someone's their laptop. Wink, wink, nudge, nudge. Yeah.
I wasn't in middle office. I'm not middle office.
Yeah, I think Kay's nailed it there. But the thing is, more broadly, it's we joke, but maybe perhaps not so much now because there's so many safeguards in place. But back in the day, 10, 15, 20 years ago when I first started, on like bank holidays and over Christmas and New Year and stuff, it literally is. It's the lowest person in risk that gets lumbered with all the jobs, and you'll be surprised how many kind of fat fingers and ricks kind of go through on those days, because it's just people aren't used to doing the jobs they're being forced to because no one else wants to do them. I like to think that doesn't happen so much, but again, it's things that do happen. Weird things happen at times, like times of the year like this.
No, for sure. Wonderful. Well, basically, that's all I've got. Yeah, I think an interesting week, which we've run through all the interesting points. Yeah. Anyone else want to throw anything in, or are we all good?
I think we're all good. Jay,
all good. Yeah,
awesome.
All good.
Guys, thank you so much. It's been we've been doing these for a couple of months now. Many more to come in 2025. Also, lots of very exciting things to come from PiQ and AlphaPicks in 2025. Stay tuned on that front. But guys, honestly, thank you so much for taking the time out and getting on these shows. Listeners, thank you so much. We'll get this up on YouTube and all the other ways very soon. Have a wonderful Christmas, happy holidays, happy New Year, and we will see you all in 2025, hopefully.
Have a good
Pleasure.
one.
Awesome. Thanks, guys.
Stay away from the cartel.
Yeah.
See ya.
See ya.